for today, guys. We're going to wrap up our discussion on Chapter 10 and 14. Just going through some review questions just to get us prepped for the exam, which is on Wednesday. So don't forget that. It's our last exam and also our last class meeting. So after Wednesday, you're done with this class, which is good. So that way you can concentrate on some other ones if you need catching up. All right. Also for Wednesday, I'd like you to be here for the exam. That's one thing I'd like to see you come in for that. We will start at our normal time, 10:30. I will try to be here, though, by at least 10, so that if you did want to start a little earlier, you certainly can on Wednesday. I got an early morning meeting. I can't get here sooner than 10. All right. So I'd like to start. I only have one of these today. Is with our overhead variance computation. We'll review that. This is another one where we're kind of working backwards, so it's a good one to review to make sure we understand our template and how it works. Also remember there is the other version of this template, the flexible one, and that one we covered with problem. Now I probably won't be able to find it. I'm just looking for it now. Problem 61. Performance report it's called, problem 61. This is it's basically the template that I have here, just in a different format. So hopefully just be aware that there is another way to do these variance computations, the spending and efficiency. With those performance ones, remember we're still looking at the same items, just in a different format. To get the spending variance, we've got to look at the actual versus the plan rate in this case. And then for the efficiency, we're coming off of the middle box and going to a comparison to the final box. So hopefully that is just a different format that you're able to do it on. So problem 61, just review that one for the other format that we might use on the test. Review problem 61. We did that one last week, Wednesday. All right, so let's take a moment here and review problem 75. I'll stop my recording. Does anybody need a template? Okay, let me stop it. Okay, so for problem 75, they didn't give us the SVOR, so we have to use the high-low method to figure out the standard variable overhead rate. So, but they did give us 2 points, a high point and a low point. At 540,000 budget, at a budgeted hour level of 30,000. Compared to at 18,000, our budget amount is $396,000. So if I solve and break this down, what did you guys get for your SVOR? $12. That's perfect. So where does that $12 then go on our template? Yeah, this green box here, right? So $12, $12. So that's what we need there. Now, the author talks about the standard rate used to apply overhead is how much in total? Does anybody see it's right in the beginning? 18, right? So 18 minus 12 is obviously 6. The 6 then is our fixed overhead rate. So again, more complex than normal. So this 6 becomes our standard fixed overhead rate. So that too is new. That's basically new. Just again, trying to pull in chapter 3's material to get to here as a review. Let's look at our next computation then, which is our budgeted fixed overhead. Let's use the high amount, 540,000, which is the total cost. I subtract 30,000 times our $12 variable overhead rate. So how much is this then? $540 minus what do we end up here with?
180,000.
Yeah, 180. And the 180 is our budgeted fixed overhead amount. So where does this 180 go on our template?
The budget we fixed overhead.
Yeah, right in the middle, right? The middle box. Right here. So we had the $6 standard fixed overhead rate. We have our budgeted fixed overhead costs at 180. All right. So what else did they give us for this problem?
The actual is 200,000.
So Michelle, what spending variance does that give us?
20,000. And that is unfavorable.
Unfavorable. Very good. You spent more money than what we had budgeted for. Excellent. What else do they give us?
The volume variance is 20,000 unfavorable.
So what does that make this box then?
160.
160. And then what does that make this box? I'm going backwards. I don't think it comes out nice, does it?
No.
16.
26,666. 6 continuing.
Let's just make that 67. 26,667. So my total variance, let's just wrap it up here, is 40,000, both in the same direction. So we can add them two together. Unfavorable. So looking at the volume variance capacity measurement, right? volume variance unfavorable. What was the plan? How many units was the plan? I think they based it on hours, right? Because I don't think they told us how many hours to make one. Between 30, right, and 18. What was our actual hours? Oh, they don't even tell us that. Oh, 18. They don't. Okay. So I can't glean much off of that then. Let's go to the variables section and see what they give us there. So I can use the same hours, right? The allowed hours. Times 12. Probably not a nice number either, Tom.
I kept it in my calculation of 320,000.
Oh, okay. So you did not rounding, you
Yeah,
you
yeah.
got to a good number then?
Mm-hmm.
Awesome. And they must give us the efficiency variance, which they do, is 18, favorable. So I'm going to work backwards. Teresa, how much is the middle then?
302,000.
302, very good. And then what was the actual hours? Because that probably doesn't come out either very good.
No, 25,167 rounded.
So efficiency-wise, we did pretty well. We have fewer hours than what we planned for the units that we made. And then actual overhead is 310. It's a $8,000 difference. Liz, what direction? Is 8 here? We spent more, right, than what we thought we should spend. So that means it's unfavorable. So if you want, if the box on the left is greater than the box on the right, it's unfavorable. Obviously, it's different. It's reverse. If the box on the left is less than the box on the right, then it's favorable. Since I have an unfavorable and a favorable, we can net the two together. It comes out to be 10. Favorable is the larger amount. Cool. All right, let's practice the questions that you might encounter on Wednesday. Let's look at question number 1. What is the answer to question number 1? $6. Let me do this in purple. Question number 1 is $6. Going on to question 2. Determine the fixed overhead spending variance.
20,000.
Unfavorable, right? What could be a problem here? It seems like a simple question. What do sometimes students pick? They pick the wrong one,
Oh,
right? Possibly, variable, what I'm asking for fixed. So please be careful with those questions. Number 3 is the variable spending. $8,000, unfavorable. Question 4, though, determine the standard hours allowed per unit of product. We basically got to use this number, right? The 2667. Remember that this is the allowed hours to make how many units? How many actual units did we make?
100,000.
The 100,000. So if that is the case, if it takes 26,667 hours to make 100,000 units, question 4 wants it per unit. So we got to take the 26,667 divided by 100,000 units. And we get 0.266 repeating, right? So that's question 4's answer. How long does it take? 0.26, how do I convert that to minutes? This is hours, how do I convert this to minutes? I multiply by what? 60. So how many minutes does it take to make 1 unit? 16. And that's the budget, right? That's the budget of work. So obviously we're below that, right? We did it with 25,000 units, or 25,167 hours. So a little better than 16 minutes a unit. All right, so do we have to know the high-low method for the test? The answer is no. So you will not be complicated with that type of scenario. But again, it was a good practice to work backwards up in the template. You will be given those problems where I'll give you the variance, and you have to figure out the allowed hours or actual hours or something to that effect. Just be careful that we get the boxes. Ooh, that's not good. Why did that go? My thing is possessed. Where was I now? Just be careful with the direction, right? That's the main concern here. Take some time. All right. Any final questions on chapter 10? That's all I have for 10's review. Good to go? All right. Going to 14 then. Could I have you look at the example in the problem, in the chapter, on page 798, please? Page 798. One of the tasks on Wednesday is to look at the net changes. What's happening? And those net changes tell us a story, basically. So if you look at the property, plant, and equipment on page 798, and I'm going to turn there too. Once I get there. You'll notice that property, plant, and equipment changed by $10,000. The accumulated also changed by 10 for different reasons. And then finally land did change by 87.5. The additional information that is given to us is that equipment with a book value of $50,000 was sold for $70,000. The original purchase was $90,000. So basically we have to use both the net change and our story here to figure out what actually we will be doing on the cash flow statement. This is where students struggle, converting this information to the cash flow statement. So let's do the gain. Let's do the gain first. What is our gain on the equipment sold?
20,000.
20, right? So we had a sale of 70,000. Our book value is 50. the gain is 20. Now, do I add a gain to my net income under the indirect, or do I subtract it?
Track.
Yes, subtract. I was almost going to say the opposite. So this is a subtraction. Subtract gain from net income, right? It has no cash influence on my cash flow statement. So we do subtract it. Very good. How do we compute book value? So my next question is book value. How is that computed? Oh, good. Now I got to get back to cost minus accumulated. Thank you, Catherine. Excellent. That's exactly correct. So my cost was given what? What is our cost?
$90.
The 90. We know that the book value was 50. So my accumulated depreciation must be what? The 40. Excellent. Accumulated was 40. How is that possible when I have 10 here for the accumulated? The change into my accumulated was 10, but I took out, right, 40. So what must have happened?
You bought something else.
I'm looking at the accumulated. We didn't buy anything else. Let's start here. If it's going up, right? It went up 10. I went down 40 when I sold the equipment. But I went up 10. What must have happened? And I need it for my cash flow statement. Accumulated depreciation, what must have happened? I had more. My hands are telling more.
But other equipment or other.
No. Think of your adjusting entries, what's happening at the end of the month. More. What's the big one we do at the end of the month?
Expenses.
Yes, what kind though?
Depreciation.
Yes, thank you. Yes, we got to it. So what must my depreciation expense been for the month then? I went down 40.
Like 50,000.
It has to be 50. That's the toughest one. If you can get that one. On a cash flow. Because we need not only the gain, right? We're going to add back or subtract. Oh gosh, I'm doing it again. We got to subtract the gain. What are we going to do with the depreciation expense? Add or subtract to net income? It's non-cash. We're going to add. Very good, Catherine. You had it too, I think. We're going to add this to net income. That's what you got to do on Wednesday. I'm not going to give you the depreciation expense. I'm not going to give you the gain. You've got to figure those two out using the information and using the changes, right? Now, does land have depreciation attached to it? No. So this 87.5 is actual the amount. What did we do? We must have purchased that. correct? That's a use of cash to purchase that land. Now, our property, plant, and equipment went up a positive 10 also, right? So let's take a look at that. How much did I take out? What did I sell?
Equipment.
How much equipment at cost? What was the cost?
90.
90. So here again, I went down 90, right? But my change was a positive 10. Was it not? It went up. If I look at this account, it went from 400 in year 1 to 410 in year 2. That's a positive 10. So what must have happened in the middle?
I purchased 100,000.
Yes, that's what you have to know. Purchased some more assets. What type of assets? Long-term assets for 100,000. That's again a use of cash, right? So that's a negative. Use of cash. Just like the sale, the $70,000 sales is a source of cash. On our cash flow statement. So this little problem, I can ask 3 different questions. What was the depreciation expense? What was the gain? What was my purchase on property, plant, and equipment? What was my purchase on land? Lots of questions off of one little problem. What do you think? So review problem, this exercise, this is a very nice one to review. The book does give you the breakdown, but they don't give you, let's read the fine print. This is what we had. We had a plus, we had a minus, we had another minus. Right? This is what we exactly did today, this morning. Any questions? Well, it's hard to think of one when it's not practiced a lot. The same concern I have with this is more complex because of the gain and depreciation expense, is on the finance section. So if you go to problem 5 in the book, problem 5 is on page 799. This is another good one to review before the test. Let's look at our finance accounts. If you look at the middle numbers, did they change between year 1 and 2?
No.
So we don't have to worry about them, right? What happened with the mortgage though? Okay, it went up 100,000. Is that a source or use of cash?
Use.
Oh, careful.
Source.
Source. We're getting money, right? So I'm debiting cash. I'm crediting the mortgage. So that is a source of money. That's a positive money. Source of cash. Make sense?
Yeah.
Okay, let's look at retained earnings. The additional information tells us, hey, we had net income of 180. Don't look at the summary below. So that should have increased our retained earnings by 180, correct? With net income of 180? But it only went up 100. So the only other thing that would affect retained earnings is what?
Dividends.
The dividends, the payment of dividends, right? So in this case, to make it come down 80, to show the net of 100 up, positive, right? We must have paid out $80,000 of dividends. Where does the $80,000 go on the cash flow statement? What section?
Financing.
The finance section, right? So in the finance section, we would see the 100,000 plus. In the finance section, we would see our payment of dividends going down. That's a use of cash. So these two are very important, again, to review. And showing the net change from financing of 20. So this one's a little easier. Just know how we get retained earnings. What goes in, what comes out of it. Know that for the test. Jade and Catherine, does that sound good for you? Does that make sense? Awesome. Okay. Good job. Thanks for staying with me. I leave these blank sheets here just to, this is in January, those snowstorms. That was my joke for the day. I failed miserably. All right, so let's go and try one now. Problem 48. Problem 48. This is the indirect method. Our cash went up during the year. That's always cool. In fact, let's start there, guys. Oh, page 828. Does anybody need more of these templates?
You do more than one today, I know.
Yeah, I am going to do 2 of these. Here, have a couple. Anybody else?
Sure. Sure.
All right, let's try this. Let's start with the bottom numbers. What's our change in cash? It went up, right? So I'm going to start on the bottom. It's always nice to have a check figure before we start. I had 112.5. So put that on the bottom. I ended up with 350. Bankers love that. Positive cash flow. And that change is 237.5. So that's hopefully what we end up with when we're all done here. Sam, what does the problem say our net income is? 450. So that's our top number. What will always be in a cash flow statement? What's the one adjustment in this adjustments to reconcile net income to cash flow?
Depreciation?
Yeah, depreciation expense. Very good. So that will always be there. How much was it, Tom? 125? And what do we do? Add or subtract?
And.
Add, right? Okay. What else goes in this section? Jade, what else goes in this section? From the income statement. Yeah, do we have amortization? I don't see any patent or intangible on our asset list. That is a That is another one, but from our income statement on page 828, what's also there? Or do you need a lifeline? The gain. Very good, Jade. Excellent. So, Jade, do I add the gain or subtract the gain? Maybe she didn't hear me. Jade, do I subtract or add the gain? Very good. Excellent. Thank you. So let's take the 50,000 gain on sale. 50,000, subtract that. If you want it in your notes, if you loss on sale, that we would add, right? Jade also said the amortization possibility, which is also going to be like what? Depreciation, so we're going to add that as well. Anything else that would go in this section? I don't think there is. Those are the main four that you might see. All right, let's go further into our operating section, looking at the changes in the assets. The key word here when we're talking about assets or liabilities is the current. Has to be current items. For my current assets, what are we looking at? Which two accounts? Accounts receivable is one. Inventories is another. What could be another current asset that might show up here? It's not on this problem, but what's another one?
Marketable security?
Could be marketable securities.
Prepaid expense.
Prepaid is the one I'm looking for, yeah. So be watching for the prepaid expenses. They are also considered current. Looking at the liability section, which ones are current?
Accounts payable.
Accounts payable. Any more? I think that's it. What could be? I don't see the book using any. Oh, there's a wages payable. Would also be in here if there is any. Or any of the payroll section, payroll taxes payable. Could be another possibility. All right. So accounts receivable went from 350 down to 281. That's a decrease. Does anybody have the amount?
68,750.
If receivables are going down, how does that affect my cash?
And we added.
Add, right? That's a good thing. I always liked it when my receivables went down because I had more cash available. Super, super. Inventory went up 25. Is that a source or use of cash?
Used.
Use. So we're going to decrease that by 25. We don't have prepaid expenses. We go down to accounts payable, went from 300 to 237. That is 62,500. A decrease. Kershaw, what does this decrease do to my cash flow? Accounts payable, decrease.
Makes it go down.
Makes it go down. That's a use of cash. Right? Liabilities go in the same direction. So now, those are all my current assets, current liabilities. What's my net cash flow from operations? Starting with the 450, I add the 125.
506, 250.
Is that good with everybody? Auditors, we got her? Okay. So on the test, could I not ask what the cash flow from operating activities are? Yes. So at this point I could stop, right? I don't have to complete the investing or finance sections. I may ask just for what was the cash flow from operations? Next to net income, the banker wants to know that number. Guaranteed. Because they want to see if your operation is cash friendly. Is it producing the cash needed to pay back the loan? All right, investing section. The key word has to be long-term assets. That's all that goes in here. So don't put anything else in here unless it has to deal with long-term purchases or sale of assets. Has to be those two combination. Looking at our property, plant, and equipment. How much did it change? $25,000. So, but remember, that 25 could be made up of a purchase or a sale of assets. It might be both, it might be one or the other, right? So, what does the bottom information give us?
The equipment that we sold was $225,000 originally.
What do I want to show here?
The sale.
The sale. So what number do I need?
225.
No.
Oh, the 175.
The 175 is what we need here, right? I got that money, the 175, not the 225. That was the original cost. So I'm going to make a note here. Last year I had $1 million. On my sale, what did I take out?
You took off the 225.
That's where the 225 goes. Did we have any other sales in this section? I don't think so. They only talk about that one. But I could have more than one, could I not?
Yes.
So be careful. So here again, if I'm ending the year with $1,025,000, I must have had a purchase in here of some number to get it to $1,025,000. So do a little side computation here. So I'm down to 775. How do I get up to 1,025,000? I must have purchased how much?
250.
So this is the number I need for my cash flow. I spent 250,000 of new assets to get it up to the 1,025,000. There's no other easier way to do it than this. You have to do a schedule of that account. A 250 is a purchase, I'm spending my money. And that's how I get the cash from investing. My negative Whoops, careful, Mary.
You bought some land too.
Oh, I'm not done yet, sorry. We brought some land, didn't talk about any sale, so that went up
218.
218,750. Another purchase. Because it went up. Now I think I'm done, hopefully. That's it. Yeah, those are my only two long-term assets, the equipment and land. So that's 468 minus 175, that's a use of how much?
293,750.
293,750. All right. Now to our finance section. Long-term debt is what appears here, and dividends appears in the finance section. We only have one long-term debt, that's the mortgage. What happened? Did it go up or down?
You know,
Up, right? That's a positive cash. Issued mortgage. The author might use the word retire mortgage. What does that mean?
you pay off that mortgage.
You paid off it. So that means you paid it. If you paid it, what does that do to cash?
Goes down.
It goes down, right? So that certainly would be a negative number. So look for the word retired, right? Rather than issued or took out. And then what else goes in here?
Dividend.
The dividends, which were how much?
Says they were 225.
I'm going to put the word paid here, not declared. By the way, what is the declared entry from intermediate? If I declare a dividend, what's the journal entry that's made? I debit what? What account does it come out of?
Dividends and stuff.
No. What account does dividends come out of? Not dividends expense.
What account does it come out of?
Mhm.
Retained earnings?
Yeah, that's retained earnings, right?
Oh,
Yeah. So that's what I want to debit. Retained earnings. What do I credit? This is a little tougher. It's a current liability.
payable,
Dividends payable, yep. So when I declare a dividend, does this entry affect cash at all? And the answer is no. It's got to say the word paid, and in this particular example, it says paid. What's my paid entry then?
Dividends payable and cash.
Yeah. So at this point then, this is where it will affect my cash flow because I'm crediting cash, right, with this entry. On the paid side of things, if I just declare the dividend, it has no effect on cash, right? just a non-cash entry. So watch for the word paid. It's got to say paid. Good. Did we come out? Did we finish? This is a net of, oh, this is another negative. So I'm at a positive 25. So if I start with 506, 250, subtract 293, 750, add 25, do I get my green number? So this is 506, 250 minus 293. That was 750. Just these three accounts for three subtotals. We come out to 237,500. This is probably the most complex one that you'll see on the test, in completion. Right? What do you think? Does that seem doable? All right, the last one I have, I think I have one more, it's 54. Now that we're warmed up on these, I'm going to stop my recording. Rather than giving us, two comparative balance sheets, they actually just give you an additional information. So try to use another method here. Try to use this information. See how we do on this statement. I'm going to pause my recording. If you want to take a break, you certainly may do so. And let's see how far we get with this problem. All right, so we have maybe a number that might work for us. So Diane, what did you adjust? What was one of your adjustments here?
So, depreciation expense was 60,000.
Okay. Yeah, that's always a given. So we want to add that, right? Okay. There's another one that we can add back.
It's called amortization.
Very good. How much was that?
1,800.
Did you add or subtract that?
Add.
Very good. Because that increases interest expense, right? It's adding to that number. So we got to take that away because we must have purchased an investment, right, below its par or bond par value, basically. So we're amortizing that over the life of the bond, correct? Good. We got a good start. I like both of those. I think there's one more yet, right? The patent amortization.
Which is 20. I missed that one, so my number's wrong.
Okay, that's fine. That was 20,000? Good. I didn't see any gain or losses, right, of sales. So that's not here. What about bad debt expense?
And there's 6,400 showing
Yeah, and the author says that is a cash item, but I don't know how that would be. Let's put a question mark on bad debt expense.
I mean, because isn't when you go down below, it talks about the accounts receivable increase being 10,000, and that's like net of allowance for full accounts, so would that be kind of
We'd be doubling up then, maybe?
maybe already included in that? Like figured out into?
That's true. So, yeah, that would take that into effect then. So maybe that's how they're thinking it. All right, we're going to check our answer key when we're done though. But you see my point. What's the entry when I write off an account? I debit the expense, and what do I credit?
Allowance account.
The allowance account or accounts receivable if it's the direct method, right? So let's leave that one alone. I think that's it here, guys, for this section. Let's look at our changes to current assets first. So what's our first current asset?
Accounts receivable.
Did it go up or down?
Increase.
Increase by 10, right? So which direction do I go then with that? Is that a source or use? Use. Very good. Excellent. The increase in accounts receivable is a use of cash.
So when it says net of allowance for
It's-
doubtful,
Yes, it's considering that bad debt expense.
yeah, and I guess I subtracted the 64.
So what's happening, Diane, is within the 10, the account changed 3,400 down to 6,400 or whatever it was. That's the 10. So the accounts receivable went down 3,600, but in reality, this also forced it down by 64, the bad debt.
So when it says net of allowance, it's included in.
Yeah, it's included in there already. So that's why we don't want to double it up. But we're going to check our work just to be sure. Very good. I think I have one more current asset, or two actually.
Decrease in inventory.
Inventory decreased. How much?
16,000 and it added in.
Yeah, that's a good thing. We can get rid of inventory. That's always a good thing. And there's one more.
Prepaid insurance. Which decreased by 2,000.
So we're going to also do what?
Add.
All right, so we did the interest expense in A, we did the prepaid insurance in B. We haven't done C or D. We've done E, the receivables, and F, the inventory. So I think we're done with our current assets. Next is current liabilities. So accounts payable is always going to be there, increased. Sam, can you let me know it increased by 7,500? What does that do to my cash? Yes, very good, awesome. Let my vendors help me out with my cash flow, right? That's always a good source for cash. And then finally, wages payable. is our last current liability, decreased by 3,000. Liz, what does that do to my cash flow? Wages payable decreased by 3,000.
Decrease.
Yeah, it's a negative. That takes away our cash. So starting with 17,500, adding 81,800, and then my current section, what do we end up with?
111,800.
Can we confirm that? Is that whatever, but somebody else got to?
Cengage confirmed.
Is it really? Oh, so we did do it right. Thank you, Teresa. Now I don't have to look at my answer key.
There's in the book.
Huh?
Does this,
It's in the book, is it?
In class, non-graded exercises.
Oh.
awesome. Thank you, Teresa. So this is what the author thinks too. So that's a good sign. Awesome. Any question on the account names and why we're going up or down? Or where they're located? What section? Any questions? Good job. I think that is all I had for us for today. That is my last problem. So if you need to work on your homework assignments, you can do that. You've got about the last half to do it in. Or if you want to study for your exam in intermediate, that's fine too. Jade, Catherine, thanks for joining. Good to have you. And we'll see you on Wednesday.
If it makes sense, I don't know. I won't be with this.